A slew of companies declaring special dividends in recent weeks. 3 companies making announcements this morning alone. Joining us with predictions of which companies might be next and what investors should do with all of this is Deborah Borchardt. She is the street markets analyst. And Deborah, this is a big deal. You're talking about tons and tons of companies that are now moving things. One of the situations this morning, Cato Corporation just said that it's going to be moving all of its dividends for next year into the end of this year so that their shareholders can get that early gain on this and not have to pay the higher dividends tax next year.
Right.
It's really changing the landscape.
I know. It almost feels like we're talking about Greece. People don't want to pay their taxes in Greece, and here you have all these people in America that are starting to complain about paying taxes on dividends. And we're really just reverting back to the levels that we used to be at, several years ago. So it's time for the dividend tax holiday to end. We're out of vacation. Let's go back to paying our taxes on our dividend.
Really strange, though. If a company is doing things like this, does it almost entice the shareholder to say, okay, I get all my dividends and I'm going to sell right after it because I'm not getting any dividends next year with that?
Well, that's some of what the criticism has been is some of these companies are even borrowing in the debt market to pay these special dividends, which I think is a really wrong thing to do. And I also kind of look at some of them and I wonder, well, why are they doing this? Because it seems like they're putting the shareholder first over their own company. Shouldn't they put the money back into their company, maybe hire people, grow organically, rather than
Well, if it's dividends you're going to pay out
dividends.
anyway. If it's dividend you were going to pay out anyway and you're just changing the calendar. I don't know. I'm arguing from both sides of
They're
this.
acting like the government, aren't they?
Yeah.
Borrowing money to pay their shareholders.
Numbers are a lot different, though.
Right. Well, I think that, what I did was I looked at companies that are awash in cash and might have a reason that they want to dump some of this cash out now.
Sure.
And that was kind of what we did is we looked at those companies and then maybe companies that want to make nice with their shareholders, that maybe their shareholders are not so thrilled and maybe grumbling a little.
Mm-hmm. Deborah, if over time we move to the following scenario where we have comprehensive tax reform, we broaden the base, we lower rates to not more than 25 to 28%. We eliminate the special tax preference between dividends, capital gains, and ordinary income. And as part of corporate tax reform, we give a deduction for dividends distributed. Wouldn't that serve as a tremendous incentive for boards of directors to either invest for growth and jobs or distribute for growth and jobs on a prospective basis?
I would imagine so. I mean, it starts to level the playing field on the income line.
And so I think right now, this is another example of we've got a short-term issue we have to deal with, and human nature being what it is, people are going to react to what they know and not what they don't know. But it's also another example that we need to start thinking about what do we need to do longer term, that makes sense to help improve economic growth, enhance our competitive posture, generate more job opportunities, and I would respectfully suggest that's one element that could help.
It would be nice to see some long-term decisions rather than this continual short-term decision-making.
Right. I mean, we are too myopic by far, and we've got to change if we want to create a better future.
Well, one of the challenges, of course, is that CEOs think quarter to quarter, and they're rewarded quarter to quarter. If you actually had their stock options vest 10 years down the road instead of next month or next year, you'd actually see some different kind of decision making. One of the things I think is interesting about this
10 years is a long time.
Well, but then you start thinking about the interests of the company and not the interests of the next quarter.
Not many last 10 years.
Maybe not
as part of the cliff conversation, what's remarkable to me as a Democrat is that there's been no conversation about corporate taxation. And even though there's a 35% rate, that's not an effective.
Well, there has been. If Simpson Bowles, it would go after some of the corporate tax rates.
In the president's plan that was released on Friday, which seems to have caused the markets to move today up.
I think there's
that was Friday morning. Markets.
I'm kidding.
Taxes won't go up on dividends for people making less than $200,000. They'll still just pay 15%. So, and really the people that are most concerned about this are the people making $250,000 and above. And so you're back to that small group complaining about this tax. And
tax it at ordinary income, you get rid of all that, and you get rid of some of the advantages that the wealthiest people would take care of. But Deborah, why don't you walk us through some of the stocks that you're looking at in this?
I mean, some of them, like Apple, tons of cash, and it's kind of pulled back lately, and people have started to, God forbid, talk bad about Apple. We've never talked bad about Apple. And now you have some critics coming in talking bad about them. Microsoft, tons of cash. Windows 8, not getting a ton of a great reception. So this is another way to make nice with the market. Maybe Gap. Gap's got a ton of cash, and Gap, has struggled for several years. They're just starting their comeback. So maybe this is a name, GM. Here's a company that's known for, in the past, giving some big dividends. That's another company that could make nice with the shareholders. So you have these companies that have tons of cash that could, want to make nice with their shareholders right now.
Okay. Well, Deborah, we want to thank you very much for coming in.
Thank you.
Appreciate your time.